My name is Andrew Betwain. I'm the managing editor of insurance investor and fundoperator.com at ClearPath Analysis. Today, I am joined by the recent Lord Mayor of the City of London and the chairman of Phoenix Group, Nicholas Lyons. Nicholas, how are you?
I'm extremely well. It's very nice to speak to you, Andrew.
Thank you very much for being with us. So Nicholas will be speaking at our private markets event, which will be taking place in March in London at the One America Square Conference Centre. He will be doing the opening keynote address around the topic of finding private-public solutions to pension reforms. It's a big topic with lots of buzzwords, lots of exciting new developments, and lots of regulation coming down the pipeline. So Nicholas, I'm going to jump straight into the questions for you. So my first question, which is, as part of your time as Lord Mayor, you travelled extensively seeing other financial centres. What should the city and the UK pensions and investments and insurance industry in general learn from these other places? For instance, Australia and the super systems they have around their pensions.
Yeah, I think one of the interesting things that I learned when I was traveling abroad around 14 countries, the largest economies in the world, is that the UK actually has the second biggest pension system in the world after the US in terms of the amount of money invested in it. And there's much about our system that has been market leading. But actually, when you look to the returns that our pension system is delivering, they fall short, particularly when you look at the most successful pension systems, Canada and Australia. So I think there really are some strong lessons to be learned there, particularly about how those pension systems invest in unlisted asset classes.
Very interesting. Yeah, it's a very good point. And bringing on to that, you were part of the Mansion House reforms, which were an agreement on pension schemes to increase investment as well as flexibility around DB schemes. Can you talk us through the process behind it, what it can offer to the industry, as well as what's advanced since its announcement?
Yeah, I think the bit that I was particularly focused on during my mayoralty was looking to try and mobilize DC pension money into unlisted equities. So it's sort of quite a niche area to be focused on. But for me, if we could make some progress on that area, we could clearly demonstrate that our pension system was underinvested in that particular asset class. And that asset class, as you look about global returns, over time generates a compound growth rate of around 19–20%. So the focus was really to say, is there a percentage of our DC pension pots, our default pension pots, that we can invest in that asset class to supercharge pension savers' returns, and in so doing, provide accelerator capital, later stage VC capital for the growth companies in the UK economy, and get a sort of a win-win. And my motivation for doing that was that by starting the debate about that and trying to convene the pension providers, the pension industry around that, we could open up a debate about the whole pension system. And that's really what has happened. And the Mansion House reforms was the Chancellor extrapolating on the work that I had done, which ended up with the Mansion House Compact, this DC piece, looking at DB reforms, looking at local government pension schemes reforms. And so we have set in motion a debate that I think has really significant ramifications for the pension industry.
It's very interesting. And I want to build on that topic around the sort of general UK pensions industry and market. So my next question is, how would you compare the UK to other markets in terms of opening access to private capital and new opportunities, especially around private markets? And then further on to that is, how do we incentivize the industry to do more in this space?
Well, I think the motivation has always got to be to try and deliver better risk-adjusted returns for our pension savers. We know that the vast majority of people, well over 85% of the people in this country, will have pensions that will underperform their expectations. So we need to get higher contributions into pensions. We need to make sure that those pensions are saved into for longer, and we need to make sure that we're optimizing the returns implicit in that. So I think, again, if we look internationally at some of the most successful systems in the world, they're allocating about 23% of pension pots to private asset classes, to infrastructure, real estate, private credit, and private equity, unlisted equity. We're at less than 9% as an industry in the UK. and less than
Mm.
1% in unlisted equities. So I think there are huge opportunities there. I do think we need to incentivize people to do that. And I think there are ways in which that can be done. Clearly, in a government which is constrained financially, offering fiscal incentives will have to be hard fought. But that, I think, is why the private sector needs to work very closely with the public sector, with the government and the Treasury, to figure out the sort of, ideally, relatively cost neutral ways to stimulate pension systems investing, our pension system investing in the right sort of asset classes that are going to stimulate growth and deliver those pension returns.
Thank you very much for that. And I want to build on that because we're filming this on the day that it's been announced that the UK has fallen into recession. So my next question is, looking at the macro environment, what are you seeing on the horizon in terms of the UK for inflation, the general investment, and of course, our upcoming election? And where specifically might the insurance industry need not paying enough attention as it maybe should be?
Well, there's quite a lot to unpack in that question, Andrew. I think most people would say that the expectation is that the reduction that we've seen in inflation will continue, and there is a certain amount of commentary that suggests that in the second quarter we could be coming down closer to the sort of 2% target. I think on the back of that, we will probably see some interest rate movement. My hunch is that the Bank of England will be rather slower to act, simply because they'll want to see some proof that these sort of lower levels of inflation are really going to stick. But of course, we are coming into an election period, so it will be very interesting to see what the Chancellor has up his sleeve on March the 6th. And indeed, he will, by all accounts, have another autumn statement also to act on. I do think there are some really important issues which both the Conservatives and the Labour Party are focusing on now. So I think they both recognise that we have to stimulate growth in the economy. The economy is pretty much flatlined in recent history. We need to get growth back into the economy. We need to get that growth back across the whole of the UK to try and make sure that we are, spreading that economic growth to all corners of the UK. And there is a huge role for financial services to play in that. For the insurance industry, particularly the long-term savings part of the insurance industry rather than the P&C side, I think that will manifest itself in working on long-term investments in infrastructure projects. And again, to the private-public thing that I'm talking about here, the private sector needs to work with the government and with the Treasury to help work out how we shape infrastructure projects and use government funding, of which there is a short supply, to prime the pump and then crowd in private capital behind that. And we're seeing changes to solvency rules this year that will enable insurance companies to allocate more money to unlisted assets without having to allocate more capital to it.
Very interesting. And my final question to you, more generally, what's your forward-looking idea around where 2024 is heading?
Well, I think 2024 is going to be hopefully a year in which economically things start to get back to some sort of level that we feel comfortable with. Long-term interest rates, again, I don't think we're going to see long-term interest rates coming down by huge amounts. The governor of the Bank of England has said he doesn't expect to see base rates below 2% again. Referencing the fact that we've come out of a very extraordinary period of time, and businesses will need to adjust to that. But I do think there is going to be increasing amount of engagement, obviously, from both the Conservative Party and the Labour Party as they put their manifesto together. Growth is going to be absolutely central to that. Engagement with the private sector is going to be critical, and there's a recognition by both parties that you can't have a strong British economy without a thriving City of London and thriving financial services sector. So I think financial services has got a huge role to play. And we need to demonstrate, as I always said as Lord Mayor, that the City of London is not only resilient and resourceful, but responsible too.
What a great note to end on. Responsible and resourceful. Thank you very much, Nicholas, for your time. It's been a pleasure speaking to you. And if you're watching this and it has whetted your appetite about hearing more of his thoughts, please do follow the links below on this video, and you can see where to register for the Private Markets Investor event in London on the 21st of March, where Nicholas will be giving the opening keynote and giving more of his thoughts on these topics. So thank you once again, and goodbye.